Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Charles Schwab. I'm your co-host, Joel Alconin, and I have Greg Harmon on the line. He's a CIO and partner at Presidium Capital and the founder of Dragonfly Capital. Greg, how you doing this morning?
Doing great, Joel. How you doing? Thanks for having me.
No, glad to have you on again. So you got 25 years of trading experience at various places. And where would you rank the trading activity of the last couple weeks as far as being able to stick to your risk reward ratios and your the rules that you try and follow in the market? Where does this last few weeks rank?
Well, you've had both extremes really in this last couple of weeks. If you take a look at, say, the S&P 500, for example, the low that we hit around October 15th,
Correct.
was a clear signal that that the market was going to reverse, and risk reward there to the upside was extremely high. But going into that, there was a lot of uncertainty to the downside, and coming back out of it, even as early as the beginning of last week, there was still a lot of uncertainty about whether or not the bounce would hold.
So what told you then when you got down to those depressed levels that it was due for a turnaround? Was there a trend line? Was there a Fibonacci number? I mean, or are you looking at it, after it came off those lows and then, you took a position based on lows staying intact? What was your trigger?
Well, my view is always look to find a mosaic of ideas, several different things that point in the same direction to confirm that the market is either turning or continuing a trend. And with the S&P 500, you saw long tails at the bottom. So from a Japanese candlestick perspective, a couple of really long tails on October 15th and 16th. You also saw the bonds, the TLT, if you take a look at that, spike up pre-market and then pull back sharply, with the VIX spiking sharply and pulling back as well. Those all gave the potential that there was a reversal that was going to happen, and over the next couple of days then, you could take a look at the potential bottom in the S&P 500. There was a harmonic pattern, a 5-0 pattern that was playing out, that said that the bottom was a good level for it to bottom, and that there was some upside bounce to that.
Did you say the harmonic 5-0 pattern?
Yeah, like Hawaii 5-0.
Yeah, that's what I was going to throw, and then I thought everyone on the desk would be like, "Oh, Joel's mentioning his old corny shows again." Could you explain that, please?
Yeah, sure. Harmonics are something that Scott Carney discovered, and he put out a good book on it. But they're based off of Fibonacci ratios, and the 5-0 pattern is a longer pattern, and this one actually started probably back in May, with the rising trend, then a pullback that began the beginning of July or the end of July, ended in the middle of August or beginning of August at 1904.
Mm-hmm.
Then it bounced back up to 2019. What's key about that is that the retracement was above 113%, but less than 161.8% of the move down. From that 2019, we saw the move down to 1820, and that is significant in that it was more than 161.8%, but less than 200% of the move down, or 224% of the move prior. That pattern says that once you get a 50% retrace, I know there's like all sorts of figures here, and it's tough for just the sound bar as opposed to a chart. But once you get a 50% retrace, you can count on that to reverse back lower. That retrace level was at about 1920. So when we hit the 1820, and then the second day bounced up to 1860 and confirmed it the next day with a move over 1880, there was reinforcement patterns that we had at least 40 points to the upside. It wasn't until a couple of days later that that harmonic pattern blew out, failed, by not reversing back lower once it hit 1920 and continuing on higher. And here we are today looking at new all-time highs in the pre-market.
I followed you on that. I really closely because that was one thing when we did come off the lows. I was, that would have been the hard thing when you did come off the lows here, and then you just had a little bit of a consolidation. That was, I think, the key for many people. Like, okay, there's the dead cat bounce, and I think what exacerbated the move up from that level was people are like looking for that pattern to come to fruition and kind of press their shorts, and then when that didn't come to fruition, you saw what happened. That's amazing move. Did you get shaken out of any of your longs at that level, or were you just prepared to hang for it to go back down to the lows?
Well, as the market does, I had prepared by putting in collars, put spreads to the downside to protect positions, but several of them did get blown through, so we got blown out of a bunch of positions and are building back up again.
Okay. Rob Hood from the chat was just asking if can you just post the chart that you just talked about for your stock twigs followers if you get a chance later on today. He kind of wanted to take a look if you have that pattern available. So looking at the market now here, we just made a challenge at the all-time high, 216.75. Just got to 16 and a quarter. When we came on the show this morning, we were trading near the lows of the session, but certainly it seems like no one's running out to short this market. Still trying to get fully invested. What's your outlook for this week? And do you think that the unemployment number on Friday will have a lot to say with where we end up?
Well, I think the unemployment number on Friday will have a lot to say with what happens this week. Because I think that you will get a little bit of a follow through today, but we'll probably have a much quieter week this week in anticipation of what that number will be. Not that it really makes a big difference, but we tend to see the market go a little bit quiet the day before or a couple days before.
Okay.
So in terms of S&P 500, I think we have some more upside here. Maybe 202, 203 in the SPY, maybe 204 even. And do we get it all today? We may get a lot of it today and then just kind of stall or bounce back and forth around 200 again. Same thing around the Qs. Maybe we get up to the 104 resistance level from back in 2004 or 2000, and then bounce back down. Russell has been something. So the IWM is what a lot of people have been looking at lately. Starting the day here, we're 116.75 right now. There's some resistance at 118, and then there's the all-time high. It's still well above at 120. So if you're going to see strength, you see a new high in the IWMs, and then all that stuff I said about just hanging around here probably goes off the table, and we start to head higher quickly.
Is there any stocks or any sectors that haven't been as much of a recipient of the bounce, and you still feel there's some good risk reward ratios in them, or if it hasn't rallied by now, it maybe won't rally at all?
Well, one area that we're looking at a lot is the oil patch. Oil has had a horrendous summer and into the fall. And dropping from like $105 down to $80, but it's been hovering here for a couple of weeks now. What we're seeing is some of the oil names, ConocoPhillips, Phillips 66, Valero, even the big names like Exxon, CBX, look like they're starting to show signs of reversal. So we're looking at those to start adding positions in. So kind of against the thought that if it hasn't bounced now, it's not going to bounce. Those are starting to look like they may turn around.
Okay, and do you think anything that's just gone a little bit too far, too fast, that you may be looking to take some profits in, or you're expecting maybe not to exit your longs, maybe hedge up a little bit, or wouldn't it be surprised if they came back down to earth a bit?
Well, there are some of those, like some of the transport names. We're into Norfolk Southern that had a sharp bounce, moved back up, and large cap names like Johnson & Johnson that have had more than 10 days in a row to the upside and are just looking crazy strong. Wouldn't be surprised to see them at least take a pause and maybe pull back a little bit.
And any emphasis on the elections on Tuesday? I know it's more of a there is some national implications and more local government things and like that. Is that something that concerns you at all, or are you just like a technician and you'll just read the charts the next day?
Yeah, I'm the latter.
Okay.
The elections are not a big thing for me. In fact, I will bring the cheat card with me to the election booth to figure out what I'm actually voting for.
Okay. And just going forward here, you're looking for a little pause in the markets here and continuation of the train, focusing on the unemployment numbers on Friday. I mean, at this point, the Fed just seems to be doing everything right. You think that can continue?
I think it can continue, but I think that we're going to get some. Well, we've seen that we've got some support, and we're going to get continued support from our Japanese friends in trying to provide liquidity into the marketplace.
Did that totally catch you off guard? That move that they made on Thursday night and Friday, was that something that you had even?
Well, it's interesting. The Nikkei had been kind of close to that breakout level and had been bouncing against it for a while, and then kind of pulled back a little bit. And what was interesting about the initial move off of the Bank of Japan's adding liquidity was that it got right back to that breakout level, but did not break out. So even in Japan, they were kind of surprised about it and wanted to make sure that everything was okay. It seemed, and we certainly got to follow through overnight with another 5% move in the futures.
Did you get wrapped up in any of the Ebola plays at all, either on the long or short side, or did you just leave that craziness for other people?
Yeah, I leave that craziness for some other people.
Okay.
A good volatility for a day trader, but that's not my game.
That's not your game. And did you make it out to StockTwits?
I did. I was out there. Yeah.
Yeah.
So some of your buddies out there.
Yeah? Yeah. How'd they do out there?
Yeah, Jason and Kyle did all right.
Stocktoberfest, excuse me. I said StockTwits. Joe just corrected me. Stocktoberfest. So did any observations from that?
From the entire Stocktoberfest panel, for people who haven't been, Howard Lindson puts that together, and a large portion of it is around venture capital, new ideas that are looking for funding and that. But around the periphery, there's a lot of technical analysis and fundamental analysis from market practitioners, professionals that are showing how they go about their process and try and help other people out.
Okay.
As well as some new products out there. The MarketFi product that you guys have out there looks like a really great platform.
Okay. Great. All right. Well, thanks. Thanks for coming on today, Greg Harmon, CIO and partner at Presidium Capital and founder of Dragonfly Capital, a student of technical analysis here, coming on our show, giving us some comments on what was and what he's looking forward to in the future. Greg, as always, thanks for coming on. We hope to have you on again soon.
Thanks again, Joel, and I'd love to be back.